Welcome to our lecture, Money and Capital Markets. So money and capital markets are critical pillars when we're dealing with the financial system because they help in facilitating the efficient allocation of resources in an economy. These serve as platforms for buying and selling various financial instruments that will help maintain liquidity, that will help to support investment and drive economic development. So what are money markets? So the money market, by definition, is simply a market that deals with short-term financial instruments whose maturities are within a year. So primarily used for short-term financing. They are supplied by governments, by financial institutions, by large corporations, mainly to manage short-term funding needs. The most common instruments that are used in money markets are treasury bills, commercial papers, and certificates of deposit. We also have what are called capital markets. So capital markets are mainly long-term. They involve equities and bonds. These ones are more than a year. So capital markets are important also because they help us understand the funding that is long-term. They involve issuance of what? Trading long-term securities like debt and equity. So in this market, it's very crucial for raising capital that is meant for expansion, for raising capital that is meant for innovation. So capital markets can be divided into two. We have what we call the primary market, where new securities are issued, and secondary markets, where already existing securities can be traded. So these are what we need to know. Now, the global financial market and their functions. What are the key functions of the global financial markets? So when we're dealing with the global financial markets, these are interconnected platforms that help to facilitate the flow of what? Capital and financial services across borders. So these will help to link you, the savers, and investors internationally, and they play a very critical role in economic globalization. So what are some of the functions of global markets? Number one, mobilization of savings. So global markets will help to channel household funds or institutional savings into productive investment sectors. So they encourage economic growth by financing businesses and governments. Secondly, they help in efficient capital allocation. Efficient capital allocation. So they help allocate capital efficiently by pricing risk through interest rates and security valuations. So what this means is simply that through interest rates and capital-driven valuation securities, financial markets will ensure that the capital flow from the most efficient and promising sectors and enterprises. The other function of global markets is liquidity provision. So these are markets that will enable investors to quickly buy and sell assets to ensure ease entry and exit. So this high liquidity will reduce on transaction costs and will also enhance what? Market confidence. Thirdly, they help in risk what? Management. So it is through these markets that derivative instruments like futures contracts, options, swaps, these will help investors and firms to manage various types of financial risks. And these risks can be interest rate fluctuations, these can be currency volatility, and also commodity price changes. So these global markets also help in price recovery, function of price recovery. So through price recovery, it will reflect real-time value of the financial instrument based on supply and demand. So what this means is the financial markets will provide a platform or a mechanism that will determine a fair price of these securities based on real-time supply and demand. So it is this price transparency that will help us have informed decisions, especially as investors and policymakers. Then number six, they help in facilitating international trade. So foreign exchange markets will enable currency conversion and international investment. So what this means is that the global markets, especially the foreign exchange or forex market, will allow businesses and individuals to convert their currencies and also make cross-border trade and investments more efficient and feasible. So what services are widely sought by the public? The financial services that are widely sought by the public. So the following are the financial services that are widely sought by the public. Now, the financial sector, we must understand, offers a wide range of services that will support personal finance, will support business operations, and also support long-term wealth creation. So we have savings and deposit services. So these include savings account, fixed deposits, recurring deposit schemes. Okay. These savings and deposit services will help individuals and businesses safely store money whilst earning interest. The other range of services that support personal finance through these financial services and sought by the public are credit and loan services. So here, banks and financial institutions will offer credit facilities like personal loans, auto loans, home mortgages, and also business loans. So these are the services that will support consumer spending, entrepreneurship, and infrastructural development. Other services, insurance services, which covers a broad spectrum of services like insurance cover, health cover, property and casualty cover. They provide financial protection against these unforeseen events and the risks. The other services sought include investment services. These include the access to the stock markets, the mutual funds, the exchange traded funds, these are ETFs and bonds. So these services will allow individuals and institutions to grow their wealth and achieve financial goals. The other function is that of what? Payment services. Payment services. So these payment services will encompass electronic transfers, the EFTs, mobile banking, online payment gateways, as well as credit or debit cards. So these services will ensure that it's fast, it's secure, there's also efficient transactions. Okay, number 6, we have foreign exchange services. Here, banks and forex dealers will provide currency exchange and international money transfer services. So it's important for travel and global trade. Then also retirement and pension planning, which involves products like provident funds, pension schemes, annuities, and retirement plans. Okay, so these are some of the services that are sought by the public generally. So we'll now look at the money market and the capital markets. Money markets in depth and the capital markets in depth. So what instruments are used in the money markets and what instruments are used in the capital markets? So the following are the instruments that are used in the money market. So we have, by the way, what did I say? What happened in the money market? Where short-term financial securities that are issued either by government or financial institutions are traded. So these instruments typically they mature within a year. So the instruments that we have in the money markets will include the treasury bills. What are treasury bills? These are short-term securities that are issued by government to finance short-term funding. So the features of these are that number one, they're issued at a discount to the face value. For instance, a 100 kwacha bill can be sold for 950 kwacha, and they're redeemed at a full value upon maturity. So these ones have no periodic payments, and the difference between purchase and maturity value is the investor's return. So you can have a 91-day treasury bill, which is sold at 980, but redeemed at 1,000 kwacha with a return of 20 kwacha, okay, within this 91-day period. We also have commercial papers. What are commercial papers? These are unsecured short-term promissory notes. They are issued by large corporations like big companies to raise funds for short-term liabilities. What are some of the characteristics of a commercial paper? So a commercial paper is it's got a number of characteristics. What are some of the characteristics of a commercial paper? So here are some of the characteristics of a commercial paper. Number one, the commercial paper will mature between 7 to 270 days. Number two, let me just beam some of the notes in depth. So it will also be issued at a discount and redeemed at face value. A commercial paper only is credited with companies that can raise commercial papers, making them generally safe. So examples could be multinational firms that can issue these to pay for inventory or repurchases. So we also have a banker's acceptance. The banker's acceptance is a time draft, or it's a promised future payment that is guaranteed by a bank. So the features for a banker's acceptance is that it is used in international trade. It provides guarantees to sellers that that payment will be received. It is also traded in the secondary market at a discount. What other money market instruments do we have? We have certificates of deposits and repurchase agreements. What are certificates of deposits? So certificates of deposits are simply time deposits that are issued by banks and will offer a fixed interest rate over a specified period. So these ones cannot be withdrawn before they are matured. The negotiable certificates of deposits can also be sold in the secondary market and are issued in large denominations to institutional investors. For instance, a bank can issue a 6-month CD with 100,000 at 5% interest. We also have what we call repurchase agreements. They call it a repo in short. It's a short-term borrowing agreement where one party sells securities to another with an agreement to repurchase them at a later price. So features are that they're usually issued by central banks. They are also financial instruments that they function as collateral loan and they provide liquidity in the money market. So these are called what? Repurchase agreements. For instance, a bank will sell securities today and will agree to buy them back in 2 days at a higher price. Then we go to capital market instruments. What are some of the capital market instruments that we know? We have equities, we have bonds, we have debentures, we have preference shares. What are equities? So equities are simply they represent ownership in a corporation. So here shareholders have a claim on profits and assets of the company. So they offer potential dividends and capital gains. These will carry voting rights in corporate matters, and they'll offer high return potential, but also higher risk. For instance, you can buy 100 shares from a company that makes you a part owner. Bonds, what are bonds? These are fixed debt instruments that can represent a loan, but made by an investor to a borrower. They have periodic what? Interest, which is called a coupon. Generally, they are safer than equities and can be traded in the secondary market. We have debentures. These are also long-term unsecured debt instruments that are backed only by the creditworthiness of the company or the reputation of the issuer. So these ones don't have collateral. They pay fixed interest and are issued for long-term funding, but they have higher risk than the secured bond because they may offer higher returns. Then we have preference shares. These are hybrid securities that will combine features of both equity and debt. They offer dividends before common stockholders receive theirs, and typically they do not have any voting rights. In case of a liquidation, the preference shareholders will be paid earlier than the equity shareholders. So these are some of the instruments that are traded in the money market and the capital markets. Are we together so far? Are we together so far?
Yes, sir.
You- You're a bit fast for me.
Okay, so let's do a quick recap on what we've discussed. So let's start with the money market questions that we had looked at. So question number 1, what type of financial instrument is issued at a discount and it matures at par? quickly, we discuss that. What type of financial instrument is issued at a discount and matures at par? A treasury bill. Which short-term instrument is commonly issued by large corporations to meet working capital needs? The commercial paper. Okay. Then number 3, what is a bank's guaranteed instrument issued primarily for international trade? It's a banker's what? Acceptance. Which instrument involves a promise to repurchase securities at a later date? The repurchase agreement. Repo. What short-term deposit instrument is issued by the banks with fixed maturity? Certificate of deposit. What short-term instrument? What is the maximum maturity period for commercial paper? We talked about the number of days, 270 days. What feature makes the treasury bills risk-free? What feature makes it risk-free? It's backed up by government. Government is the most secure. Which money market instrument is a form of a secured short-term borrowing? It's a repurchase agreement. Okay. So now let's go to our exam question. So discuss the functions performed by the global financial market, outlining the key financial services that are widely sought by the public. 25 marks. What are the functions by the global financial markets, and outline the financial services sought by the public? So this was 2022 paper, 25 marks, question number 1. Who remembers? So we talked about the functions of the global financial markets. What were the functions that we talked about? We said the key functions of the financial global markets are what? Number 1, we talked about mobilization of savings, efficient capital allocation, liquidity provision, risk management, and price recoveries. And further on, we went to look at some of the most sought services by the public from the financial sector. These sought services, I sent them in your notes, included what? Savings and deposits, credit and loan services, insurance services, investment services. So this is what the examiner was actually looking at. Okay, so this is what was required in question number 1. Discuss the function performed by the global financial markets. Secondly, outline the key services sought widely by the public. So these are the services that are sought by the public. Number one, savings and deposits. So it includes savings account, the fixed deposits, recruiting deposit schemes, which helps individuals and businesses safely store money whilst earning interest. The other service is credit and loan services, where banks and financial institutions who offer services like personal loans, auto loans, home mortgages, and business loans. So these services will support consumer spending, entrepreneurship, and infrastructure development. Then insurance services, which covers a broad spectrum, including insurance of life, health insurance, property, and this provides financial protection against unforeseen events. And finally, we talked about investment services, which includes access to the stock markets. Okay, so I don't want to look at the calculations for now. We have quite a lot of work to look at. So tomorrow we'll start looking at some of the calculations, but for now, I need to understand that this course is very manageable. And all the principles that we're going to look at in this course are just a component of corporate or financial management. So let's say any questions?